right, and we begin with developments on the money market. Interest rates fell significantly in just a week. Yes, you heard right, from about 24% to 19% from the last Treasury bills auction. We want to hear more on this latest development in this report.
From a high of about 35% a week ago, interest rates on the short-term securities have dipped significantly on the yield curve, whilst the 91-day bill yield has also fallen by 16%. That of the 182-day bill has plunged by about 13%, going for 22.8%. The 364-day bill has also dropped by about 9% to 26.8%. The significant fall in the yield of the T-bills means government will further save interest costs. Last week, government saved about 220 million cedis from the reduction in T-bill yield. Analysts and market watchers expect the rate to come down in the coming weeks. Meanwhile, the government got about 4.20 billion cedis from the sale of T-bills, about 74% oversubscription. It, however, accepted 3.31 billion cedis of the total bids.
Well, let's get more now on this. Joining me on Zoom is Head of Trading at Republic Securities, Patrick Edemagama, on the latest from the money market. So for those wondering what's been happening in the last few days, tell us, how do you explain the decline in interest rates?
Well, good afternoon, Daryl. Good afternoon to your viewers. Actually, what's happening now is that because there is a lot of liquidity on the market and excess money, investors now are believing that the Treasury bill is the only safe haven now, or the only instrument which is relatively safer, and hence investors have thrown a lot of money to the government. We saw that in the past 3 weeks, investors have thrown more than 50 billion cedis to the government, and the government accepted less than half of that. So it should indicate that the government is now having a lot of power to control where the rates are, and I think they are doing exactly that.
So who is benefiting from this, really?
Well, in all, the government is lessening its burden in repaying back, because if you look at the amount of money that saved just by reducing these rates, it's making it easier for government to be able to pay back in the next 3 to 1 year. If you look at the previous rate on the 91-day, last week it dropped by 1,139 basis points. This week it's dropped by 416 basis points for the 91-day alone. That is quite a huge drop, and this is going to help the government in the near future.
But is it good for the markets generally from an investor perspective?
Well, if you compare, looking at the yield curve, if you compare the current rates to the yield curve, if we are considering the old bonds, you see that this is going to really drop the short end of the yield curve, and that is relatively okay, and because it's going to also affect interest rates in general. But if you look at the new bonds, using the new benchmark bonds to draw the yield curve, you see that it still needs to drop further in order for the market or the other indicators to respond accordingly.
All right, I just wanted to listen to Joe Jackson, who is Director of Operations at Delex Finance. I spoke to him sometime last week about the developments to do with the declining interest rates, and he was essentially asking government to force the rates to drop further. Just take a listen to what he told me.
Well, listen, I'll be honest with you, just a decline of what?
52.5? Yeah.
I thought that was actually pretty good, because the way our bond market was going, if the decline had been 70-80%, I would not have been shocked. It's as simple as that. When the throes of the debt exchange, this person is included, that person is excluded, there's a U-turn. Listen, the way I see things, we just accept it. Listen, we've had a horrendous event. We've had a default in government bonds. We've had a domestic exchange program that created tremendous liquidity, profitability issues for the institutions. At this moment, a decline of 50%, I'll take it. I'll take it.
A decline of 15%. How realistic is that, Patrick? And how long do you anticipate this decline to be sustained?
Okay, if you look at the trend and the level of demand on the market, we expect this to continue. If the government begins to pay the old bonds starting today, we are also going to see excess liquidity on the market. So there's still going to be more demand against the little supply, which is what the government has control over. So we expect this to actually continue, the trend to continue when more money hits the market.
All right. I also want to ask you about how the auction ended last Friday. We've heard about the 91-day yields. How about the other aspects of the market?
Okay, so for last week, the 182-day dropped to 22.8%, decreasing by 370.81 basis points. This was after it dropped by 1,000 basis points the previous week. The 364-day bill dropped to 26.8%, decreasing by 72.03 basis points. We noticed that the 91-day took the huge chunk, recording about 43.2% of bids that were accepted against 27.9 and 28.9 for the 182-day and 364-day respectively. Again, there is increasing demand for the 364-day bill. That is also a clear sign that investors expect the bills to drop, so they are intending to lock themselves for a longer period.
All right, let's switch to the capital market, the stock market. This week, we expect the fine performance from last week to continue. What's the update?
Well, last week, we saw MTN and Total leading the market, gaining some pesos to close at 1 cedi and 6.05 cedis respectively. We expect that to happen again. I mean, actually to continue this week, because the demand for MTN and Total keeps increasing. On the sell side, we are seeing huge offers in Coil and Bank. They dropped a peso each last week. We expect that to also continue. And in general, the banking stocks are actually losing a lot, so it's affecting the financial stock index. But for some time now, we see that MTN is driving the entire market. So currently, the market is experiencing some positives, and we expect that to continue for some weeks.
There's generally some sense of optimism about how the markets will fare towards the end of the year. I don't know if it has anything to do with the successful implementation of the domestic debt exchange program. What do you think?
I think this has got to do with investors initially losing their hope in the fixed income market, so running back to the equities market. However, our market was always dominated by financial stocks, and where this happens like that, we have companies like MTN, Gold, and all those other non-financial stocks getting attraction or some tractions lately. So we expect people to move towards the stock market while the interest rate drops.
Okay, I'm going to ask your thoughts about this other story we are following for you. We are expecting government to pay start paying coupons on bonds that were not swapped under the domestic debt exchange program. I'm going to ask you your thoughts, what you're hearing right now as to the payments. But first, this report from my colleague, George Affe.
Finance Ministry, in a statement on February 27, announced that it will resume the payment of coupon and principals on bonds that matured last month. This was after the initial date was rescheduled due to what the ministry describes as delays in finalizing the settlement of bonds by persons that signed up to participate in the domestic debt exchange program. Sources close to the Ministry of Finance had then argued that the administrative work under these bonds that were swapped demanded a lot of time to ensure that the settlements are done well. That is why it had to push back the payment dates for these old bonds. The new date for paying these bonds is coming at a time that coupon payments on treasury bills have dropped significantly over the past 2 weeks. Some have argued that it was one of government's strategies to use this domestic debt exchange program to reduce interest payments on bonds and treasury bills issued by the government of Ghana. However, these bond payments are restricted to maturities and coupons for last month. But for many of these bondholders, will the Ministry of Finance kickstart the process of crediting their accounts at the Central Securities Depository? Well, maybe their fingers are crossed, waiting for their email alerts and messages on their phones.
Patrick, it's past midday. Any news yet?
No news yet. I'm even checking my terminal as we are speaking, but no news yet. And investors have been calling and asking questions about what we expect or what is happening. So we will keep following out until we get something concrete.
What happens if there's a delay?
That's going to dampen the spirit of most investors because, now if you look at the market, the entire market is still yet to recover and trade fully. Investors want to see if the old bonds will be paid, and that's going to create some certainty in the market for trading for both the new and the old bonds. So if this is not paid or there's no news to indicate payment or when it will be paid and all that, that's going to actually dampen a lot of spirits, and that's going to keep the market still.
All right, Patrick Edemagama, Head of Trading at Republic Securities. Keep watching the terminal for us. Let us know if there is any news on the payment of coupons on bonds. You're watching the marketplace. Let's switch to utility tariffs because hoteliers are complaining about the what they say is an astronomical increase in water bills for the month of February. They are saying that some hotels are paying as much as 300% from what they paid in January. President of the Ghana Hotels Association, Edward Nyameke Jr. joins me with more of this. Thanks for your time this afternoon. So tell us a bit about the feedback you're getting from your members on the bills for February. You're muted.
Yeah. Okay. Yeah, Daryl, thank you so much for the opportunity. Honestly, I would have wished that the PURC boss, who is my namesake, Dr. Ishmael Aka, would have come on this program to say that there's been an error in the calculation of the tariffs for February. Because, Daryl, on 16th August 2022, the PURC announced the tariff adjustment, 27.15% for electricity and then 21.55% for water, which was actually effected from 1st September. So for those in the industry, particularly for water, the tariff changed from 9.23 to 11.219, approximately 11.22, which when you calculate comes to the 22% increase, which is very close to what the PRC had announced, which was okay. And then in January, the PRC announced further adjustment, and that was for 29.
Oops. Looks like Edward Akanyamike Jr. is frozen there. He's back, I'm told. Can you hear me?
I can hear you, yes.
All right. We lost you a bit.
Okay, so I was talking about the tariff adjustment announced in January, as against the one announced in August. So the January one referred to 8.3% increase for water and then 29.96% increase for electricity. So that's exactly what we were expecting. Even though we were hoping that upward adjustment would not happen, we're still expecting only for members to receive SMS messages. This is water company has gone digital, so we receive the bills by SMS. Now, the 11.22 approximate tariff had changed to 30. So let me give you an example. So for a company that receives, say, 233 consumption, when you multiply, 198 consumption, multiply by the 30, the consumption comes to 5,940. As against the one in January, which was multiplied by the 11.219. So when we checked, there's been an actual increase in tariff of 167%. 167% over the tariff in January. As against the 8.3% announced. And we are beginning to realize that the PRC has actually created a new, I don't know the right word to use, but a new band for hoteliers and other commercial users. Because even the information we have, they don't have the current tariff based on which that increment was done. But of course, we were at 11.22 and now at 30. Now, service charge has also increased from 7 Ghana cedis and 29 pesos to 100 Ghana cedis. What is going on?
Well,
what is going on?
I'm also taking a look because I received my SMS on water bills today, and it looks like it's almost double of what I used to pay. Point is, I know that you've sent the complaint to the PURC. Have you heard anything from them as of now?
We are yet to hear anything. You know, they have the WhatsApp platform, and at one of our engagement with them, they say if you have issues, we should communicate with them on that platform. I've sent it. I'm yet to receive any feedback from them on that.
Okay. And what does this mean in terms of pricing? I mean, in terms of your rates and the impact on your operations?
Daryl, I don't even want to go there. I don't want to start any conversation. I am just praying and waiting on the PURC to come and announce that there's been a major mistake in the tariff adjustment for us and correct it immediately. Because no hotel can pay beyond that 8.3% increment that was announced by the PURC. No hotel can pay anything beyond that. No one we were paying in January, and he said we're going to adjust it by 8.3% as it was done between August and September. And that's exactly the calculation that was used in determining some of our operational costs. So this 167% increase in tariff, no hotel can adjust or even consider operational costs with these figures. Unless they just want to tell us to close our hotels down and go and sit home and shut down the industry.
Well, that's not...
He must come immediately to address the matter.
Yeah, that's not the option.
To agree to this kind of tariff adjustment.
That's not the option that we anticipate, hotels closing down. And while we wait for the PRC to respond, in the interim, what can be done? I don't know if you want to have a conversation about controlling wastage. I mean, it's something
Daryl, this adjustment does not call for any control of wastage or you know what? When I first saw my own bill for February, immediately it occurred to me, has there been some leakage at the facility which I need to address? In fact, I was shocked.
Yeah, well, my point is
and then I started receiving calls from our members that they had also noticed that high, in fact, humongous increase in their tariffs. Okay, so this has nothing to do with adjusting consumption to reduce anything or come up with.
Well, I'm thinking it may just be an option you may want to explore. I don't know how feasible that is, but certainly you don't also have the control over how your members use the water. how your clients use water when they patronize your services. But I just threw it up there to find out if there are any options in the interim so that you can stay in business.
And I'm saying there's no option in the interim. There is no option. Since we got wind of this quarterly adjustment, hotels have been trying as much as possible to control their expenditure with the utilities. Okay, and we are working closely with the figures that we get from the PRC itself. So when the 8.3% were announced, in fact, when the announcement was made, surprisingly, we were not really mentioned, even though the PRC indicated that they had programmed the adjustment so that some industry and commercial users will even experience reduced tariff. And I concluded that because of the several petitions we've made to government, to the Parliamentary Select Committee, to PRC and the Ghana Water Company and ECG, we will be part of those commercial users who are going to experience some reduction, only to be faced by this the astronomical increase. So what's that?
In case the PRC says, well, this is not a mistake, it means rates are going to go up essentially, right?
Well, I wouldn't sit here and make any pronouncements on what we will do, because I will have to consult my team members. I'll have to consult other industry players, because this is not even about just the Ghana Hotels Association alone. We have the Ghana Progressive Hotels Association, and we have hotels who are even not non-members of the Hotels Association, and we have people whose lives depend on the hotel industry who will have to look at all these factors and then look at the way forward. But I want to believe that it's a terrible mistake, and the PRC must come again on this before people take certain actions which is uncalled for. Because this is certainly not the Ghana that we want to build. I mean, how can you increase water bill by 167%? 160% after all the complaints we've made. I mean, is this some form of punishment?
I feel your frustration. Edward Akanyamike, Jr., President of the Ghana Hotels Association. Hopefully there is some good news from the PRC. We'll follow that up for you as well. Thank you so much for your time. And thanks for spending your time with us here on the marketplace. We want to talk next about Russian crude oil that was shipped to Ghana a couple of weeks ago. It's been in the news. And 600,000 barrels, we are told. Now, the Chamber of Petroleum Consumers has been reacting to that and saying that it does not anticipate that this would cause a rift or a feud between Ghana and our trading partners. And so they are asking that the National Petroleum Authority ascertains the true origin of the Russian crude oil that was shipped into the country. They are also asking that the government treads cautiously. Let's listen to Executive Secretary Duncan Amwa.
You see, in fuels trading, Russian cargo is not banned entirely. In fact, you can buy their cargo except that it has a cap of $60, meaning you shouldn't pay more for the Russian economy to be able to continue to fund the war. So buying cargo with Russia shouldn't be a problem. We are all for any way to get cheaper products if there's any such thing. We will be all for any way of getting much competitive prices on the market for the consumer if there's any such thing. There are regulatory issues. One, the refinery that is taking hold of the product is said not to have the kind of capacity to take that kind of volume. And questions are being asked as to how they intend to even do the processing and how to ease that also onto the markets. That in itself doesn't make it bad or criminal. Again, you also have a situation where questions are being raised about whether indeed it is crude or it is AGO contained in that vessel. Is it a combination of the two? Are we simply signing off for finished products to come into the system? We have requested the refinery in question their annual review fees does it take cognizance of such volumes? Because if you have BDCs to do that kind of trade, and then refineries are also taking stock of supposedly finished products, then it sends a wrong signal for business. And so a few issues around it, but generally, we don't have a problem if it is even Russian crude, because the international market is still patronizing. Europe can pretend not to want that crude, but once they trade with India, India is buying from Russia. So, inadvertently, they are still consuming that crude. And we believe strongly that if you were to knock out Russia completely from the international fuel supply market, prices could double overnight because their volumes are huge. 10% of global supply is something you cannot joke with. So whether we like it or not, the global system shakes off, but still finds a way to accept Russian crude. We don't have a problem with it so long as prices are going to be competitive, so long as we are being told the exact truths and not that some people are playing, different trade games, bringing finished products and saying it's crude. If we are satisfied as a country that these are within our regulatory parameters, then the NPA will be in the right to give them the go-ahead to discharge.
But one may say we've seen 20% fall in their revenue. Now let's look at Ghana. One may say in the long term, this could cause a serious problem for Ghana and its trading partners in other parts of the country. I don't know if you side with them.
Well, the Russian product or cargo, I do not anticipate should cause a problem. Rather, it should stimulate the market. You should have a situation where, because their prices are hugely competitive and there's a cap on them, what you buy from other parts of the world might be slightly higher. And I will be all up for getting that cargo because, like I indicated, you can read about embargo on Russia and what sort of embargo that the West has placed on them. Their products are still on the international market and is being patronized by countries. So buying from them should not spark any diplomatic row, except that we should be sure that indeed, is it crude we are bringing in? Is it finished products? AGO, like we are being told in some quarters.
That interview ended in the marketplace this afternoon. There is more news on our website, myjoyonline.com/business. T-bills auction, interest rates fall to 19%. That's our top story today. You can read more about it, myjoyonline.com/business. My name is Daryl. Kwawu. Thanks for watching. We will be back same time tomorrow.